This is our Forex blog for July 8th, 2013, and this is one of the best and easiest ways to trade. Using our new currency meters, which we're about to release in the next week or two, it lets you see what each individual currency is doing as if it's a regular chart. And you can add all of our regular chart studies and scripts on this, like containment bands. You want to see what the hourly moving average is. When it's above that, you want to buy. When it's below that, you want to sell that particular currency. And also the containment bands with the DSP, digital signal processing, are super fast and tend to let you know when a currency is going to reverse. We add the 1.5 and 2.0. And then we'll also duplicate this window and, for instance, look at the dollar. So you can very quickly see that the dollar is weak, and the euro, especially around 3:30 till about 8, it's above its hourly moving average and trending up. So basically, you want to look to sell the dollar versus the euro. You can see the dollar broke from above to below its hourly moving average, act as resistance right here at 4:30. This 4:30 trade right here is very high probability because the euro broke from underneath to above the hourly and it held support here. And it's very likely to go up to the Fibonacci profit target of this first swing, which it did. Which you can see, these are pretty high probability reversal areas. But until that point, you're looking to buy, looking to buy, looking to buy this dip. You want to buy the euro versus the dollar. So you can bring up the euro dollar chart, and I'm actually increasing our sophistication with our signals, in that they're actually looking to see what all the swing highs and lows are. And really, an uptrend is just a series of higher highs. Here's a high, here's a low, here's a higher high, here's a higher low, here's a higher high, here's a higher low, here's a higher high, here's a higher low. And that's one of the keys to trading and identifying a trend. And now our new systems are able to identify trends based on swing levels, and we're also able to come up with Fibonacci profit targets based on swing levels as well. In other words, this move from here to here, you got a fib target here and a fib target here. This sell signal right here identified that, and then we look to buy the pullback. Our older signals were not quite nearly as accurate. We have a sell signal here that worked, a buy signal here that worked, a buy signal here that worked, and there's if there are no high probability trades, we don't show them. And you can see another sell signal here Sunday night that also pulled back about 15 pips or so. Our next release is going to have a slew of new tools, including new signals that are based on swings and enhancements with our older technology, which if I brought up our older method, you would probably see like 15 or 20 trades showing up during the day. Some days 50 or 60% win, other days 30 to 40% win. These new signals are based on swings, Fibonacci retracement levels, Fibonacci profit targets, and of course our currency indexes, which if one currency is strong and the other one's weak, we're looking to buy, which you saw in this little pullback right here. You can see it went from 28.40 all the way up to 74. It's a 30 pip move. And even if you got out relatively soon, within a half an hour, you made 10 pips. You might see this little sideways move, you get another 10-15 pips. You buy this little pullback, you made 20 pips. And getting just 10 pips a day doubles your account every few months, 2 months. So here's the yen, just to give you an idea of what this is doing. And you can see also that as of 3:30, the yen was underneath its hourly moving average. So you can look to buy the euro yen. So you bring up a euro yen chart, wait for some buy signals on it, and you look to get in. Here's the euro yen, and some of these signals aren't showing up yet on our charts. In other words, at 3:30, I would be looking to buy this little pullback right here. You can see it made a higher high here. There really wasn't a significant pullback earlier in the day. We get into a trade right here, might have lost, got into a trade here, made 15 pips, got into a trade here, made 5 pips. our methods as of now are designed to look for more significant pullbacks. You know, you're looking to buy in here, it goes up, looking to sell here, it goes down. There's no trade right here. Here's a sell signal up here. You can see the, I don't know what trade level it's called. Trade number 9. Market pulls back 15 pips. This entry right here goes up 10 or 12 pips. This pullback here is kind of going sideways. Actually, it eventually worked. This trade right here failed. This trade right here went down 10 pips. It nailed the high right here because it's also looking at previous swings, and it can now identify double tops at key support resistance areas. This is the weekly point of control, which had acted as resistance earlier, here, here, and here. If there is a move up to that level, and the previous swing or the one before was in that vicinity, within 5 or 7 pips, it looks to sell that level. And you can see, you know, it nailed that 130.10 sell level, and it pulled back to the hourly moving average. Some of the trades I'm working on now give too many false signals, and that's why I have a different number show up for each different trade signal, so I can identify ones that maybe show too many or too low of a winning percentage, so I can tweak them. So sometime in the next probably 2 to 4 weeks, we're going to release our next version of the software, which is in the last 9 years the most sophisticated improvements we've made. We took the currency indexes, which we have in the software now, and instead of being a script which orders absolutely a ton of data, it's actually built into our data feed, so that when you bring up, let's say, GBP index, it comes up very quick, and it lets you put any of our indicators on that chart. For instance, you can see the pound is underneath the hourly here, and so is the yen. So you don't want to trade the pound versus the yen. Only once the pound breaks out and acts as support right here, this is a decent pullback in the pound, and the yen's underneath its hourly moving average. This is a very high probability buy in the pound yen at 1500. Let's bring up the pound yen. And you use the currency indexes first to identify high probability trades, and then you look to buy pullbacks. You have a very high winning percentage. So here's that 1500 time zone. We actually have a pullback right here, and our signal trade number 10 gave us a buy because the previous swing high was over 20 pips over the previous swing high, and that's a very bullish thing. And so when you get a multi-bar pullback like this, you get into that trade right here around 150.90, and it went up to 151.10 or 12. That's a 20 plus pip move in very short amount of time. And you first use the currency indexes to let you know whether to be buying or selling it, and then you bring up our it's going to be called FX trade signals, and it's going to let you know when to actually get in to these trades. And you can see most of the times when signals show up, the market does pull back a little bit. This one here, there's 2 signals, trade 1 and trade 9 fired here and went up a little bit. This one was a little bit premature. This trade here worked and went up about 20 pips. And you got some sell signals here. The market went down a little bit, not much. This one fell about 10-15 pips. This one here kind of stalled at a resistance area. And the pound yen is one of the harder ones to come up with automated systems. And there's a slew of support resistance areas I haven't even put in yet, like the hourly moving average, the monthly pivot level. You can see the swing low is at the same level as 1, 2, 3, 4 swings ago. It came down to that level and acted as support before. Anytime there's buying at a key area, the next time down to it, and you can see it actually hit it twice, you're likely to get a bounce off of it. So you got this bounce here, here, and later in the day, this area here bounced, this one here failed. So once an area acts as support, you can see it act as support 1, 2, 3 times out of the 4 times. And that's, let me just highlight these. This was acting as support, and then when it came down to that area again, 3 out of the 4 times you got a bounce. 1, 2, 3. This one failed. So anytime a support resistance area is hit, it's very likely to act as resistance the next time. Here is an instance of a resistance area. This is the most actively traded price in the pound yen for last week. And you can see once that area got hit once and acted as resistance, it acted as resistance here, here, here to some extent. You would have broke even on that. Here you would have made a little bit, and more. This one here also. You can see here, here, it finally broke out above it. But once an area acts as resistance, you got 1, 2, 3, 4, 5, 6 times in the future it got hit, and the market was repelled off that resistance sell area. So this is the kind of stuff I'm working on. It's not in the software right now. The currency indexes are in the software. They're not built in or baked in like they will be. And these signals are not available yet. The ones we have now are probably anywhere from 40 to 60% winning, and most days from my trading of these, I'm actually using these in automated systems. It's way over 50%, and it has much bigger wins and losses. So I'm going to release that information or that tool soon. And I also have Fibonacci areas found automatically. Fibonacci retracement levels, Fibonacci profit target levels, automatically generated from these swing levels. And it just finds high probability trades. In other words, if the market goes up and then finally breaks out and makes a higher high, you can see this area right here is a fib level from this previous swing. Well, not quite actually. That's why I didn't have a sell signal here. But the software now identifies fib retracements, fib targets, and some of the buy and sell signals that show up are going to be based off of Fibonacci analysis. In fact, this one I think is a fib area. It's a 50% retracement of this previous swing, and also has a bar pattern as well. Anytime you have a market make a higher high than the previous swing high and then pulls back to the 50% level, that's a very high probability place to buy. You can learn Fibonacci analysis and draw fibs on all your charts, or you'll be able to just load our software and see very sophisticated buy and sell signals that are based off of human thinking. Support resistance areas, patterns, Fibonacci retracements, fib targets, double tops, double bottoms. If a market makes a new swing high, 20 pips or so above the previous one, a 4 or 5 bar pullback followed by 1 bar up is a very high probability pattern. And I think that's one of the other reasons that also triggered, because this is it's actually, in this case, it's only 15 pips higher than the previous swing. This was a 50% retracement buy signal right here. But we're going to have all of those pattern-based methods in the software very soon, probably in 2 to 4 weeks, 6 weeks max. I'm actually trading these live, taking automated systems with them as well, and working on the ones that have too low of a winning percentage. Either I'm going to fix the rules or get rid of them before I release it to you. So my goal is to have brand new traders that have no idea what they're doing just pull up our charts, look at the currency index and know which currencies to trade, wait for a buy signal or sell signal, take the trade, and know that if you take every trade, you're going to make money most days. And that's it. And be able to grow your account very rapidly.